Good morning. Good morning. Happy Monday. Almost through the end of January already. Unbelievable. Good morning, Michael. Good to see you. Good morning, everyone. We're going to give it just a minute or two. We've got a few in the waiting room popping in, a few people's audio trying to turn on. So we're going to give them a second. All right. All right. Welcome out officially to the Market Watch Group opening bell. My name is Scott. I will be your host. Looks like we have a uh good group already here. Love it. Feels extra early out there, press. Does feel a little early, doesn't it? Good morning, Perry. Good to see you. All right, let's dive in. Disclaimers, as always. Education and illustrative purposes only. We are not advisors. Yada yada yada. Here's the agenda. We're going to take a look at the opening futures and the news. Actually, today's like the light day, and every other day this week has some kind of news. It's a labor market week of data. Some of the things we'll see are job openings. We'll see the ADP report. We'll see the excuse me, Friday non-farm payroll, weekly jobless claims. We've got the Fed. So we've got a good amount of data coming out this week. Should be interesting. As of now, having a hard time seeing what a disruptor would be. That doesn't mean there couldn't be one. I'm not blind to that fact. I'm keeping my eye out. But overall, definitely like the way things look. We'll take a look at the economic calendar. We'll look at our market posture and how we scored it. And for those of you who weren't there yesterday, um, open trades, yeah, I have a couple that I'm carrying from last week. I imagine everybody else does as well. We'll talk about what we see out of the opening range, what the implications are. Overall, if I had to say what I'm looking for more this week, I would say a consolidation, a pullback. Um, that's my expectation. Now, if you might say, well, why would you hold on to bullish trades if that's what you were expecting? I'm, I'm saying that if more likely than not, that's what I think is going to happen. But the market could easily just keep going higher. We'll look the futures. When I looked early this morning, when the dog woke me up early, pretty flat. So we'll see. Are there any trades setting up? We have a few things that we're thinking could be to open up a trading window, and then we'll talk about this week's trading plan. Let's get into it. So opening news and futures. What do we have? What do we have going on? Steven on the phone. Hi, Steven. Good to see you. We've got S&P up 0.01. You can see it was down, up, down, up, down. Now we're up. The Dow futures are down 0.03. NASDAQ up 0.11. Russell up 0.10. The oil is down about 0.5%. Crude. Some of the oil stocks may be up, Stephen. That's what maybe you're looking at. U.S. futures have muted start to earnings packed week. We talked about that on Sunday. It's a tech heavy earnings week. Google, Meta, Apple, Microsoft, Nvidia, AMD, Am I missing any names? There's a lot. That's another big piece. So it's a big. We've got Fed. We've got now. There's not a lot of expectations from the Fed. We've been talking about that. No expectations. No expectations for this report. We're not going to go through it because we've been going through it. No expectations for this report, but we'll just call it 50-50 for March 20th. So that's what we're keeping our eye on now, right? So the market has now priced in a little bit less certainty of how accommodative the Fed will be. Overall, I think we're still definitely pricing in, I'd say at least 1% interest rate cuts for this year, 1 to 1.5. Nowhere near 2, though, for me. Okay, so here's the calendar for this week. Nothing today. Tomorrow we have job openings supposed to come in around, no, that's previous. We don't have a forecast yet. 8.8, it's been hovering around there for sure. Consumer confidence expecting to come in higher than expected. That's not surprising at all. We know that investors, participants feel good about what they're seeing right now. ADP employment. Now, here's the thing. We've had month after month where they've expected it to slow down, and then it's a positive surprise. We really haven't had negative surprises yet from our monthly jobs reports. So ADP is private. Even if it does drop to 140, that's still maintenance, right? That maintains the current environment. Then we'll also hear from Jerome Powell, and the Fed on Wednesday at 2:00. Press conference 2:30. Then on for Thursday, we have jobless claims, just the standard stuff. Bob noted, I believe, an interesting drop in the productivity. Yeah, I'm not sure. That's an interesting one. I'm gonna look into when that comes out, what the implications are. That's not a bit of economic data that I've studied particularly. So yeah, I'm always open to learning more. I'm certainly, my economic background stems from understanding how economic news impacts the market. That's just how I've learned about it. And then Friday, of course, non-farm payrolls and a second consumer sentiment number. So it's pretty full this week. Okay. Our posture. If you were not there, long-term score, we over the last 2 weeks broke out of the current trend. Now, I'm not going to say necessarily like we broke above what we had drawn as, enough to say, hey, you know what? Let's reward the buyers with 1/4 point. I don't know if everybody did that. Some people maybe kept theirs at 1. Some of you maybe were already at 1.25. I don't know. Maybe you're somewhere else. That's where I am, 1.25. So good strength in the long-term trend right now, the supporting trend. I kept my short-term kept my short-term the same, left it alone. Kept it the same. I thought about it. There's definitely been like higher high breakout type price action, but I think when I look at the trend it's trying to establish, still looks more like in that 1.5 to 2 range. So I left it alone until I got more information. Volume, I increased 1/4 point. We have all the buying volume is most recent. The selling volume is getting stale, and it gave the edge to the buyers. Major market improved a little bit with the small caps, the Russell 2000 reemerging as a participant. Sector rotation stayed the same. The VIX stayed the same. but we ended up as a 6. So back into this 6 territory, definitely feeling bullish. That's how I'm seeing it. We've still got a little bit of time. And as I asked most people, I believe anyone who responded was between a 5.75 and a 6.25. So just to kind of give you a sense of, okay, now we're not trying to all see it the same way. In fact, I'm soliciting at any given time inattentional blindness, right? Inattentional blindness is a concept in life and psychology that I think plays in trading a lot. And that is where once we've developed a certain thought process, it's very difficult to see anything but that. We don't see if I like a search engine, right? If I say black shirts, it's not going to bring up white shirts. It's going to show me a bunch of different black shirts. That's what it's supposed to do. And so we want to be careful as we get into into the markets and we say, oh, look, I'm bullish and here's why. We want to be careful that we're not like everything's bullish and all I see is bullish. So I'm actively looking at different areas that say, what about this? As a group that have a tendency to view the market with not the same way, but using similar analyses. We analyze the same. It's good to have that check and balance where we're saying, whoa, hold on, I saw this. This might mean something. Yeah, let's explore it. Let's figure it out. VIX is at 13.9 pre-market. Interesting because the market is set to open up about 15 cents right now based on the bid and ask, maybe 20 cents. So basically flat, where we're just still pushing. We've been pushing these same highs for 3 days. This is day 4 now, just right at this 488, 489 level. 3 days in a row, we've been sitting at it. We can't get through it. No volume here. The VIX being up, I believe that's up, right? At 13.9. Yes. So the VIX being up, this now it's interesting because you might think, oh, that's bad that the VIX is rising. But remember, we said if the market has a mild pullback, then we would expect the VIX to have a mild increase. And that's where we are. I would say still as of now, the VIX is increasing. I would say body mostly, but shadow. So there's my range. If it doesn't get above, so let's say it goes up even one more day and then it pauses and then it turns over. That's this right here is actually very supportive of trading into a bullish window because that's our most recent high. And if this happens, that's a lower high, which is the reverse signal. High or low, we're thinking about hedging. Lower high, we're thinking, oh, this looks like it's ready to go. Remember, we said there could have been a hedge put on here, but it wouldn't be working. The market hasn't pulled back. It's just sort of hung out at resistance, just sitting there pushing the highs. It's very interesting right now. But yeah, that's a good. So the VIX is a little up, still under. Right? If it kind of catches here, over here again, and it just has that de-escalation, that supports. That's when my score on the VIX would increase, right? That lower high, my score goes up a quarter point. We take out this low, we get another quarter of a point. That puts us back at 6.5. That's very strong for us. And I don't want to be waiting for that. That just continues to increase strength. Remember, we're a 6 now. I want to be trading this if this is what shows up fairly aggressively. Is it today? No, right now, today, we're still saying, okay, let's watch and see. I don't think that anything is confirming for us yet. It's still setting up for us yet. The context is there. So here's the SPY. Look at it, it's just sitting there for day 4 now. Okay. Again, what do we say? I said more likely this week. I'm more likely to expect the consolidation. Does it pull back even just a couple of days and then it starts to turn or bounce? Yeah. Okay. So that's the SPY. I need my agenda. Sometimes I lose track of what I've done and what I need to do. We've looked at the calendar. We've looked at the posture. Mindset for open trades. What I would say is you carried through the weekend, hoping to continue to catch some momentum. Here's one that I did. Doesn't feel great, right? I mean, it's still just kind of sitting there. It's up a little but it's at the same place it's been. The stochastics is pinching even more. So for me, what would I be thinking? Yeah, it's now I only carried a very small piece of it, a small piece. A third to a quarter is what I held at this point. Most of the profit was taken. I wanted to see, is there anything left? Doesn't look like it to me. So that's where I see myself. We have a few stocks in a what we would consider a sideways or a consolidation. Apple was on our list, right? Apple's definitely, this is a setup. We had bullish momentum, buyers pushed it up, new high. Okay, it's paused, profit taking has commenced. What's our problem? The problem is it's a big week for earnings for tech. 2-1, which is Thursday. It's Monday. So right now I'm saying, hey, this is setting up. And I'm saying, hey, I only have until the 31st, which is Wednesday. There's only Tuesday, Wednesday. So I don't think that there's going to be time for these trades. If you have a rule that allows you to stay through earnings or to trade through earnings, okay, I guess maybe you might decide, I think it's going to be bullish. Now, if it's wrong, it can be catastrophic. It's a lose everything type situation. AIG, again, what's today doing? Well, based on the open, we're saying I would expect anything that's been pushing up against resistance to still be pushing up against resistance. Things that have been pulling back, like Apple, still pulling back. It's not a lot. In fact, it's starting to slow down. AIG was pushing up against resistance yesterday, still pushing the same level today. AMD was starting its consolidation. It's still in its consolidation. The problem, again, earnings are tomorrow after market. Amgen. I don't know. I think I left this one on. I feel like I got duped by the healthcare momentum. I feel like it duped me. Tricked me into a trade that just sort of fell apart. I'll keep watching Amgen, but yeah, let's go to Amazon. Amazon, you can see it's been pushing. It's just a little overextended here. It's got earnings. This isn't tech, but it's in that slew of big earnings week. So a lot of tech, couple big comm services, big consumer discretionary. Lot coming up. It's hard to imagine putting a trade on for this when your thought is it's likely to just kind of ease back a little bit here. AXP had great earnings. It's just kind of sitting there. There's nothing we can do on something like this but wait for the next consolidation. I would imagine some profit taking comes in. Boeing has tried to put in a double bottom here. Now, a double bottom from a technical standpoint is not the fact that it hit the same low twice. It is, it is that, but it's also not, because the double bottom is not a double bottom until it breaks the high point in between them. So yes, the first the first part of this is the selling pressure that pushed it to this low has now ebbed enough that it stayed at this low. Didn't make a new lower low. If the sellers were still pushing hard, it would have kept making lower lows. But the fact that the sellers have taken a break doesn't mean that we just assume buyers have regained control. So theoretically, this pattern doesn't complete itself until it breaks out. Now, for me, you'll notice this is consolidating, and then it just sort of turned into this consolidation. So I just needed to break the consolidation. Sure, it'd be good if it comes above. Then it's the pullback. That to me is when the reversal and when this pullback doesn't get down to those lows and you have a higher low, that is when this is ready to go. Now, you'll notice back here, we had a consolidation. It broke out, pulled back, didn't make a higher low. It made a lower low here. So that wasn't valid. And then it had a consolidation and it broke out and it made a higher high. So you can see this exact pattern at play. This was failed. This failed to materialize. It didn't complete the pattern with a higher low. It went to a same and then lower low. Here, it broke out again, right? We broke out. Then we pulled back. Higher low. Higher low. That's when we were open for business. And that's when this came. So if you're watching it and you're saying, hey, that's I want to know when this is done, that's what we're looking for. And you'll notice that what I have here is an inverted head and shoulders pattern. So we are looking essentially for that type. It doesn't have to be head and shoulders. It can be a double bottom, it could be things like that. But if you're ever wondering what does it take for me to say, oh, okay, I would be willing to trade it again, that's the pattern right there. That's always, always, always what I'm going to be looking for. BK, a little bit overextended. BLDR, that was one that we identified as being viable. You can see on Friday, it gave us a little piece, and today it's giving a little bit of continuation. You're probably getting your Heikin Ashi candle now. Just jumped in, press said, love it. Love it. I think that's a viable trade. What do I have the ability to do with this Heikin Ashi? 169.43. So, I mean, honestly, you're only taking maybe $3.50 of risk on this. Which means if it gets up near 180 right there, that's 2-1 at 180. I mean, you can see how this thing can move. It can definitely make 12, 15 point moves, no problem. That's 7 that you're looking for. 7 on $170 stock. What's that? 4%? 3%? 4%? 3.5? Yeah, okay. And up here around 180, 183.5 would be 3-1. So I like that. Let me get off the Heikin Ashi. BLK could be setting up, but it's been real flat. A lot of these financials that have gone into these sideways patterns, that's tough. I don't know that I want to trade those as much. BK looks good, meaning it kind of made that that we believe in the buyers type move to the upside here, right? That was enough. I keep right there. So it's broken out of this. Now what? Now I need it to pull back and stay on top. 50 is a great place to see it as well. But yeah, I'd be willing to trade into Blackstone off that type of a consolidation. Definitely watching that one. City overextended, closing, not looking to open for me. Caterpillar overextended, looking for the consolidation, earnings on the horizon. Capital One, I like it. It was another one that was, it saw its acceleration based on earnings, and now we're just kind of waiting for our next opportunity. COP, oils pulling back a little bit here. Costco is open for business, was open on Friday, continues to be open today. Does it have the hike in? It does. Nice. I mean, you can see, look, does this guarantee anything? No. Would you be pretty happy if you traded the first momentum candle coming out of consolidation? That's your last entry right there. Would you be good with that? Absolutely. Here, you only got 3, but you still would have turned a profit even on this one. Here, you would have had a crushing trade. So look, this is where we are. You're at that situation. Your stochastics is turning just like it did here, just like it did here. That's the signal. That's the signal. Maybe I'll put an alert out on this. I mean, we're all here right now, but I said I'd analyze Costco and Google this morning. Okay, we'll come back to Costco for sure. We'll come back to Costco for sure because Costco's viable, right? That's everything that we're looking for right there. And we actually said it was viable on Friday as well. And now you're getting confirmation. Does that mean you're late? Not even close, right? You're still got to see the bigger picture. CrowdStrike. CrowdStrike is becoming a maybe here, right? It's flagging. If I were to draw the flag, I'd say maybe we're still in that flag. Actually, you know what? Let me redraw that. If I really connect these highs, it does actually create kind of a flag pattern like this. This is the consolidation. So no, I would say it would have to go one more day with a little, I'd love to see it with some volume. If that happened, okay, then we'd have to make a decision. If it just kind of continues to meander in this, and then turn, then it might give us something easier to trade. Right now it'd be a little harder because we didn't get much of a consolidation. Very bullish. It's a very bullish stock. CSX, I got to go a little faster now if we're going to go back and look at one. CSX, I mean, it broke out after earnings, so maybe if it pulls back, it's not that attractive looking. I think UNP looks better. Airlines, we're just watching to see if they can kind of recover after earnings. Same thing with home builders. DIA looks just kind of a little flat. Elanco, some of you traded it, some got out. Looks like a lot of the healthcare stocks failing to launch, right? Failing to materialize. Signal was fine. Signal was good. Momentum's just failing. Yeah, happened to me. Fastenal. Oh, still looks like a great setup here. Yeah. And this is industrials. It's pulled back. So we have a couple that are already, turning. We have Fastenal that's setting up where the sellers aren't doing much after a real strong reaction to earnings. Yeah, we're just waiting to see if this will turn and give us another round to the upside. Very close. GE, nothing there for us. Gold, nothing there for us. Google, not Google. Bob, not going to look at a trade on Google. Google's overextended. I miss Google. Overextended. 2 days from earnings. There's nothing we can do here. But continue to root for tech to do well. Home Depot. Home Depot would be a maybe. Now, remember, Home Depot, my hesitation was that consumer discretionary um, showed weakness. Not weakness. Well, yeah, maybe not weakness. It showed lack of strength. All the other sectors that gave us our strong sector rotation score continue to show that strength, not consumer discretionary. And so my hesitation that I didn't take this one was the sector. I thought about it, and I would be willing to take one, but it just, and it could still look good. I mean, look, the signal today is flat. It's flat. This is turned up. I would actually say if you like it and you said, you know what, Scott, I think you're wrong. Great. Ike and Ashley's there. You could definitely, I don't know, I'd maybe put my stop just a little below here, but you could definitely set a tight stop, take a little, and if this thing catches some momentum, great. If it doesn't, tight stop. You didn't take much risk. Viable. That's viable in a market like we have now. IBM, it's kind of waiting to see how it reacts post earnings. Intel, same thing. A lot of these that are coming out of earnings, some of them are positive out of earnings, some of them are negative. Intel got beat up. We have AMD coming up. Are they going to get beat up? Here's small caps, IWM. We're hoping that it holds above the 50 on this pullback. JP Morgan looks a lot like Citi. Meta was one. So I had two, Citi and Meta that I held, just a little piece. This one's looking a little better. Citi done. This working, but almost done. Those are the last of the bulls that I have. Microsoft earnings 2 days. Meta earnings 2 days, 3 days. Is this the second? The first? Netflix post earnings bump. Waiting to see if it starts to ease up. Nvidia. Okay, so I would say Nvidia, we have plenty of time. Seems to be in some kind of possibly a pennant, could be a flag developing, looking for a consolidation. This might not last very long. It is a high momentum stock right now. We can't think it's going to just make a pullback to the 50. This thing could just pull back to this 600 level, bust out, and then make its next run up. If you want to trade these high momentums, you got to be ready for the way that they're likely to behave, ready to speculate. Car, like, was the other one? I'm blanking on my industrials. Fastenal, I believe it was, right? Yes, Fastenal looks good. Picard pulling back, looking good. BLDR already starting to turn. You can see that the window is showing up first in industrials. We're not going to see it in tech and communication services until we see how earnings comes out. And then we'll have to see how the trades develop after this earnings window. PNC flat, another financial that tried to bounce but couldn't materialize. So there's some concern there. You can see the cues look like they're moving into a consolidative pattern. SMCI hitting resistance. Here's the SPY. We're just kind of flat. Let's look at the opening range, talk about what it means to us. You can see it's just kind of sitting in this range. Even if it breaks 488, it's got so much resistance up here. Maybe we test it and then come back down into the range and we have kind of a falling star candle. I don't see where it is able to do anything other than this today. Okay. Let's go back. Let's go back out. UMP looks close actually. And this is another industrial. So you can see all the potentials. I don't want to take 4 industrial trades. I would take 1, maybe 2 of these, and then wait for other things to develop. Here's the VIX. You can see the VIX was up, has pulled back a little, still underneath this 14 level, so that's okay for now. Waste management, bullish, but hard to find a signal as of now. Walmart, not much there. Real quick, look at the sectors, and then we're going to go back and look at Costco. XBI hasn't broken support, but it really failed to, the buyers failed to do their part in this last cycle. Same thing with basic materials. Communication services, nope. The buyers did plenty. Looks great. Energy caught a little extra momentum. We'll see if that continues to show up. You can see financials made new highs. Looks still strong in financials. Industrials didn't make new highs, but at least broke out of its little consolidation, got back to old highs. Okay. Good enough. Technology, very strong. In a bit of a consolidation already. Staples, sideways. No defensive posturing happening there. Utilities, down. No defensive posturing happening there. Consumer discretionary. That's the concern I had right there. That doesn't look like a strong sector right now. So Home Depot is not getting benefited. Amazon is not getting benefited by their peers, by money flow into the group. I prefer to see money flowing into the group. I think it adds to the probability. This is why our sector rotation score dropped a quarter of a point, because we saw, look, not only do we not see money flowing in, but we had a pretty good outflow at the beginning of the year, late December, early January, and then it's kind of meandered down since then, right? So that's my concern, why I'm looking at that. Is Costco? No, actually, Stephen, Costco would be considered part of, like Walmart, part of consumer staples. Staples. You can see that's actually stable, bullish, maybe a little sideways. I mean, Costco just sort of sometimes rides alone. I'm a fan of Costco. Let's go back to that now. So you can see Costco, it's pulled back a little bit. Okay. Here's the thing. Is it viable now? I would probably say I would want a little bit more time, but you can see it's a little selling candle here. I'd maybe want to see what happens. But yes, let's just assume we look at this and it looks pretty good. Earnings on Costco. It has a dividend on the 1st. So the stock will go ex-dividend by $1. When it does that, if you have a call, the stock dropping $1 is never in your favor. But because it's a known dividend, it's really already priced into the options that's coming up. You can see this was actually, looks like a special dividend. They paid $15 right before the end of the year. You can see normally it's $1. It was $1 here, $1 here, and then it was $15 there. I don't know if that's common. It's kind of interesting, right? It's an expensive option. It's a $700 stock right now. What would my thought process be? At this point, I would actually not be willing to let it drop back down. So if you look at the candles, if I got in on Friday towards the end of the day, my stop would be stop loss below the previous day's low. I'm assuming that's the low now that I have this candle, and that's where my stop loss is. But now that we've turned up here, I don't know that I would want to put my stop loss all the way back down here if I would need to. I could put it below yesterday's candle low, which is at 679.5. But I actually feel like I'm being more inclined to even go here below today's low at this. This is a momentum candle. Now, is it possible that this candle disappears today? Yes. If the market went into a sell-off this afternoon, this candle can change. So that's why you have to decide, well, when is it valid? Is it valid in the first half an hour? Is it a little later? But let's just assume that it's at this price later in the day and we feel like it's pretty reasonable. So we're right around 690. The low of this candle is at 684.35. So I might say, you know what, I'm wrong around 683.5. Even there, you're at 6.5 points. But what am I getting to the upside? What am I looking to get to the upside? The last time this thing moved, it moved 55 points. It took 2 weeks. It took 2 weeks. And you can see here, the options are at 20% vol. This is where they're the cheapest. They're never really that expensive. I think you could buy options. I think you could do a spread if you think you're going to be in this for 2 weeks. If I'm looking for 55 points from the low, that puts me a target at 735. That's up here. Right? That's up here somewhere. This is a longer trade than a lot of times we look at. You can see it's a nice, it could only go for a week or so, but if you're going to catch a good move, that good move is going to take a little longer. So you would want to plan for that. But the way that I would look at this would be target up around 730, 735, somewhere up in here. I'd say it would take 2 weeks out. So that's probably going to put me out around, the 13th or so. Yeah, that's what I would be looking for. Whether you buy the stock, buy the option. Let's see if we can just take a quick peek at the option. Costco. Single February. Oof, that's pushing it. That's pushing it. So what would I end up doing with this? Yeah, you're right, Press. I mean, even if you go April's and you go a little out of the money, you're for sure $2,000 for a contract. This is if you would possibly be a spread trade. If I did the spread, I actually would probably go to February. And let's see what like a 700 by 710, maybe a slightly out of the money bull call spread. So now if I do this spread, 700 by 710, it would cost about $285 per spread. So that's more reasonable, right? That's another thing that spread trading can do for us, is they can make it easier for us to think about trades. So here you can see if I have a target at 735, let's move this over to 735. And a stop at, we said it was like 683, right? Pretty tight. Let's say I do 2 contracts. It's about $560 in the trade. Let's say it takes a week to be wrong. By Friday, we'd be wrong. That day is the 2nd to the 2nd. So, I mean, this says I'm risking 220. If I got out at 683, let's say 680 just to make it a little bit more. As long as I'm out by 680, I'd risk about half of what I put into this trade. And if it goes up, I could make 1,200. It's something like this is interesting. I'm gonna paper trade this just so we have something to remember when we looked at it. I'll see if that fills. Okay, 280. Yeah. So there you go. It doesn't have to be too grand. Press if you trade a spread, gives you some. It still gives you your bullish delta, slows down theta. That's what I'll be looking at. Okay, wrapping up. Now we've been through the watch list, couple of trades, couple of setups, but overall we're kind of watching to see if this thing pulls back. This week we are working on section 5 routines in yesterday's email, in today's email. You will see the links. And you'll see that I put in 2 specific links about routines so you can watch videos easily about routines. You need to define them. You need to define when. You need to define how long. You need to define to do, what are you doing, and in what order. The last thing you might define is surplus time, right? So if I have a half an hour window and I have 8 activities and I go through those 8 activities in 20 minutes, what do I do with the last 10 minutes? Do I go, how do I fill that time? That's how I would want you to define each of these routines. So daily routine, when does it start? You can see we do daily routines together. What do we look at? We look at the news, the futures. First we look at the futures. What's the market set to do? Then we look at the news. What information's come out? Then we look at the calendar. What information might be coming out? So we make sure we understand what's happening today. And then we look at our trades potentially to see what is the impact. So I went and looked at the trades that I have on to say, hey, I carried some trades. Did it work? Citigroup, no. Meta, yes. Great, that paid off. Then I'm going to have around 10:30, 11 mid-morning check-in so that I can say, hey, what's going on? Are there any signals developing? I'll look at the last hour. All of your routines should be defined so that it's just automatic. That's what you're working on this week, section 5. So that's it for me today. It's good to see everybody. Remember, tomorrow, yeah, I'll even post that. You want me to just post the January 26th, Friday, January 26th link is not good? Shoot me a reminder in Discord and I'll post it there today. And don't forget, tomorrow we are okay, I'll check the email. Tomorrow we have an evening class, 8:30 p.m. Eastern. Our foundations class continues. Looking forward to that. So hopefully I'll see you guys there. Have a great rest of your day. It's good to see everybody. As always, happy trading.